The next move for Bitcoin will be critical in determining the high time frame direction of the trend. Will Bitcoin break down from 60,000, or are the bulls going to push the price back upwards into a parabolic season? Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope everyone's having a fantastic day today. In today's video, we are going to be taking a look at the short-term and the macro charts, going over the current technical and structural data, the key levels, what the price action is doing, and the most important things you should be paying attention to moving forward. We'll also be discussing the current macro uptrend. Is it at risk of ending? What would be the invalidation points for it? And of course, everything else in between. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us over on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, with Bitcoin, and the relevant economic news. If you are interested in taking your trading to the next level, join us on VIP. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, and exclusive analysis. Not only will we get access to our trading setups, you'll get access to our group chats, our general chat, trading chart education chat, trade setup, daily video help, and news chat. If you're interested in joining our VIP channel, you can contact me in the pinned comment of the free channel. For more information, click these links over here to find our entire trading track record and watch a video to find out more. Let's jump in. So let's get started, guys. And in today's video, we'll start on that market data. 24-hour volume is up 2.99%, sitting at 125 billion. 24-hour liquidations, however, are down 1%, sitting at 154 million. Of the 154 million in liquidations, 114 million have come from long positions and 40 million have come from short positions. Taking a very brief look at the price action over the last 24 hours, we can see Bitcoin was unable to sustain above that neckline of support. We discussed this in our prior video. We told you guys that a breakdown below this horizontal area of short-term support would result in the price action seeing a pretty steep correction on the short term, down to our 60.8 to 60k region. You can see we have come just shy of that, reaching around 60,834. It's about $34 off our target, but very, very close overall. This again is going to be our next area of support. We can see a massive reduction in our historical resistance range over here, suggesting that again, a breakdown from this level was going to indicate a downtrend would follow to that target. We did see that happen, and we'll come back and discuss what is going to happen next from here in today's video. Moving over to the broader markets, the DXY has seen a little bit of a green few days, pushing back upwards above this uptrend again, holding steady along this trend line. Nothing too definitive yet. Again, if we do want to see the DXY continue aggressively upwards, it will need to break above these prior local high points at 106.5. Until then, we are expecting downwards to continue over the next coming weeks. If we do see the DXY break over that 106.5 level, we should see a strong continuation upwards, likely to 107 or 108. Of course, a correction over here will be very bullish for the risk asset markets, and a continuation upwards would be very bearish. Moving over to the broad markets, the S&P 500 looking very, very strong here, with 1 day and 22 hours remaining on the weekly candle. We can see sitting at a price point of $5,211. Again, like we've been saying, we do expect macro continuations upwards for the S&P 500, provided that 5,000 level does hold. If we do drop below 5,000, we are expecting corrections to 2021 high points and that weekly 50 MA, but until then, expecting continuations aggressively upwards, macro targets as high of around 6,000. Again, watching for that next move upwards, we do need to break above that 5,300 level to trigger that strong continuation upwards, but until then, we are looking high time frame bullish. The same goes for the Dow Jones, breaking over that 39,000 trigger point on the short term, which is a bullish trigger. Are expecting continuations upwards over the next couple of weeks, again, provided we remain above 38,000 to 37,700. we are very much macro bullish, and this is a nice healthy retest of support. If we do drop below this level, that is when we expect macro corrections. Let's go ahead, guys, and discuss really quickly what we're going to be talking about today, show you a couple charts, and then jump into Bitcoin. So we're going to be discussing primarily, again, what is happening here in the short term, specifically what has happened in the last 2 or 3 days, where Bitcoin is likely to go next, and what structural patterns we are developing. We're also going to be zooming out and discussing the key levels of support and resistance on our higher time frame, what the pattern is suggesting, the key trigger points you need to be paying attention to, and both the bullish and bearish scenarios. And we'll also be talking about our high time frame trends, our macro uptrends, discussing possibilities for invalidations. At what point does the macro uptrend technically end? And are we still going to see this parabolic phase occur for Bitcoin? So a lot to discuss, guys. A quick word from BitGet and BingX before we jump in. I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, BitGet and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the BitGet link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, BitGet and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump on into it, and we're going to start off on the macro chart. So obviously Bitcoin has been dropping now for a couple days. We saw the start of this month very green with a 6 to 8% rally toward the upside, reaching around 65,000, and since then we have seen a pullback back to around this $60,000 to $61,000 region. And with this, a lot of fear is building up in the markets again. A lot of people are becoming scared, being cautious of deeper corrections, and it's always good to, when you're in doubt, just zoom out and look at the high time frame context, look at the high time frame charts. So what we are looking at here is going to be our weekly Bitcoin chart. We have 2 indicators we are paying attention to today. This is going to be our Bollinger Bands, which is this blue band, and we have this yellow or orangey band in the middle. And of course, we've got our Pi cycle indicator, which is a combination of different high time frame moving averages. Now, what we have noticed, guys, is if we look back in the past, historically, after every halving event, we generally see Bitcoin increase in price over a period of a few months. We're looking to a few months to a year. This is traditional, this is standard, this is where we enter that official bull run period of Bitcoin's price action. If we do look at the standard 4-year cycle in this chart, technically this is the first month. Our May month is our first month of which we enter the traditional 4-year cycle bull run. This is a monthly period blocked up into our bear market, okay, our accumulation, and our bull run. This is our 4-year cycle. And this is going to be the first time we enter that bull run phase. So technically Bitcoin is only just entering that parabolic phase of the bull run right now, according to our traditional 4-year cycle. There's been a lot of speculation this year about left translated cycles, or the cycle coming to a top sooner than expected, and these theories are still very much valid. But if we scrap all those ideas for a moment and look at this chart, it does tell us that Bitcoin is still very early in the overall high time frame macro uptrend according to our traditional 4-year date range trends. Now, that doesn't go to say Bitcoin is coming near to the top, or Bitcoin is not going to a top for another 1,000 days or whatever, but it can give us some perspective on the overall trend, specifically where we are sitting at in the high time frame uptrend. So if we take a look now at our weekly chart and we apply both our Bollinger Bands and our Pi cycle indicator, we can see a very important thing. And that is, once Bitcoin has retested the prior all-time high of the prior cycle, okay, so in this instance it was around 69,000. Once Bitcoin has retested the prior all-time high of the prior cycle, we generally do not see a break below, okay, on the weekly chart, and we talk about a weekly candle close here, below both the Bollinger Band midline, which is going to be the orange line, as well as the Pi cycle indicators, the pi cycle midlines, which is the high short and low short moving average and estimated moving average, we do not see a weekly candle close underneath that level after we have retested the prior all-time high. And this has been consistent in pretty much every single cycle we have had so far for Bitcoin. Our first cycle, we saw that exact consistency. In our second cycle, we saw the same thing. And in our third cycle, we saw exactly the same thing. And that again is, once we retest our prior all-time high point, we do not see a weekly candle close below, again, the Bollinger Band midline, which we can see is the orange line. Okay, we can see we remained above this entire time. We remained above it again this entire time. And again, we remained above it this entire time until we create these local high points, these aggressive parabolic rallies, okay? And if we look at the pi cycle indicator again, excluding the Bollinger Bands, we can see the same thing. Going from that first cycle once more, we can see a break above that prior all-time high, or even as a retest of that prior all-time high, we remained above the pi cycle indicators until we came up to around 64,000. We broke down, went into a multi-week, month-long downtrend, and then we had that next deviation to high point again. Moving back into the price cycle, we remained above the midline of the pi cycle indicator the entire time before breaking back down and entering a bear market. So what we have seen historically and what we are seeing now is matching up very, very similar. And that is that we are seeing Bitcoin again having retested the prior all-time high. It is sitting above on the weekly chart, the Bollinger Band midline, and it is sitting above the pi cycle indicators. And these levels coincide with a price point of around 55 to 56,000. Again, this price point is ever so slightly moving upwards over time because it is a rising diagonal trend, so it is going to be rising upwards over time. So it's sitting around $56 to $55,000 at the moment. And that does mean if we do see a weekly candle close underneath the $55,000 to $56,000 level, we will have seen something occur at this stage in the cycle that we have never seen actually happen for Bitcoin again, and that is going to be a high time frame shift in overall strength, suggestive of massive amounts of selling pressure on the high time frame chart over a large period of time that we have not seen happen before. But so remember, these moving average indicators, they're moving averages. It is what it is, the definition of it in its name. So the longer we start to see these downward corrections, okay, the more these moving averages start to flatten out and the price action gets closer and closer. And this is suggestive of exhaustion. So generally what we have seen in the past, we haven't really seen these large periods of sideways or downward price action as we approach or retest these all-time high points to the point at which the price action breaks under these moving averages. So what we have seen in the past is it has shown us we've had significant strength sustain as we reach these all-time high points. And if we do break below the midlines on this instance, it's not going to indicate the end of the bull run, but it's going to tell us that we have seen significant exhaustion developing at a point at which we have not seen develop in the past. And this is a data point that we have not seen before and thus could be used to justify things occurring such as an early top for Bitcoin or a larger correction in coming for Bitcoin prior before the next parabolic rally that we haven't seen before. So these are things you have to be paying attention to. So if you take anything away from this macro analysis, it is the level at 55 to 56,000 is an area of major confluence and importance from a technical perspective for Bitcoin if we're looking at historical price patterns. Now we could go a step further on this really quickly and add the Ichimoku cloud. We can say again, guys, when we look at the Ichimoku cloud, every single time the Ichimoku cloud breaks in, we generally see that happen around the same point in time we retest that pi cycle high point. And as we are retesting a price cycle high point, after the Ichimoku cloud has been broken by the pi cycle low, the price action is sitting above the midlines of the indicator. And again, if we look back at every single cycle, we saw that exact 3-point validation occur. And during every single time that did occur, we actually ended up seeing macro continuations upwards, right? We saw these macro continuations upwards. So that goes to tell us that even though we are seeing some weakness, even though we are seeing some exhaustion develop, what this is telling us now is this exhaustion has not fully developed into a downtrend on the high time frame yet. Yes, we have a downtrend on the short term, but it has not fully developed into a high time frame downtrend yet on the high time frame charts. The macro uptrend is still intact. So it is not the time to be overly bearish. It is a time to be cautious and to prepare for scenarios that could develop. And that is why we're telling you these key levels such as 56 to 55. But it is also time to be aware that as of right now, the technical validations that we have had in the past are still present, and therefore we expect that pattern to continue provided the invalidations do not trigger at 55k. So let's now zoom out and discuss, what would happen if we were to break underneath 55k, because we're talking about how that's such an important level. So let's go ahead and zoom out. This is going to be the current uptrend for Bitcoin. This uptrend has been, this is a major uptrend, guys. If we look at this uptrend, right, this level over here, 32,000, when we broke above 32,000, that was going to actually trigger the bull run. If we look historically, this is our accumulation phase under this level. This is our accumulation, our bear market low level. This is our bear market low level. We broke above this level, we enter a bull run. We've been in a bull run ever since. That is our bull run right there, okay? So this trend line developed within the bear market accumulation. It pushed through the bull market trigger point, and thus this is our actual bull run uptrend. This trend line is representative of the bull run Bitcoin has been in ever since October 2023. This is the bull run. This trend line is literally the bull run. So a break below this trend line would tell us we've gone from a high time frame uptrend, which is our bull run, into a possible high time frame downtrend. So technically, guys, when we're looking at it from a structural perspective and a trend-based perspective, this is going to be the level we do need to remain above to remain bullish on the high time frame charts. Yes, like we said, a break of 55 will show high time exhaustion and weakness, but weakness does not always result in a downtrend forming. It could just result in higher time frame corrections toward these major levels of support. So I'll say it again, if we remain above this level, we expect continuations upwards, okay? If we drop below this level, that is when we are at risk of major corrections for Bitcoin back into that $40-ish thousand level. It would be very bad if we were to see that. So let's now jump over to the slightly small time frame. What we can see over here, guys, is a horizontal channel formation. This has been some of the most ugly price action I've witnessed on Bitcoin for a very long time. We're talking like price action we saw all the way back, all the way back down in September 2023, even back, a little bit in December 2023. I haven't seen price action this choppy for many months. And what we can see here again is that high time frame horizontal range. We had deviation to the low side, again, deviation to the high side over here. This channel is again a 22% depth channel, which is a very large consolidation. This is a huge consolidation for Bitcoin, and huge consolidations lead to huge reactions. So a break above our trigger point at 73.8 will result in a strong continuation upwards, whereas a break below the trigger point now at 56.6, okay, which is the range, which is the local low of the prior low, will result in a continuation towards that major uptrend we just spoke about. So let's now go ahead and discuss what is happening in the short term, as we have discussed this range so many times. I don't feel the need to get into it too much. I will say one more thing, guys, though. The midline is the point of which the probability shift in favor of the bulls and the bears. A break over 67,000 will result in a continuation to this range high, which increases the likelihood of a breakthrough. While we remain underneath this level, the risk of again rejections towards these lows are still very possible, as we have now seen again within the last 38 or 48 to 24 hours. So moving down to the hourly chart to wrap up the video, guys, just a quick summary on the short term. Like we said in our prior video, we had this uptrend over here. We had the consolidation against our support low, our range low of the current consolidation. We did not see a strong continuation upwards. We actually saw again a pretty nasty rejection of Bitcoin. We had that positive momentum shift, as we can see on the RSI over here, which resulted in a nice movement up for Bitcoin, breaking above these prior high points, but it did not sustain. We didn't see a sustained break on that price action. We saw a massive amount of selling pressure come in at around that 65 region, pushing Bitcoin down and inevitably resulting in a loss of this range low at 62.4 and this support level at 62.8, resulting in a breakdown of our short-term support into our low historical resistance range, which has been partially filled now. We've got partially filled orders within this range. So again, we are starting to establish a decent amount of support over here at 60,800 to 60,000, which you would know is going to be the range low support, okay? The range low support of the high time frame range. So a key critical level of support we are now retesting. So this area is going to be obviously an area of support and thus a bouncing point. What we can see in the price action over here is again downtrend in momentum. With the downtrend momentum, we have a downtrend in the price action, and we do have a possible descending channel formation developing over here into our area of support. Now, this is going to be a bullish reversal pattern, and thus provided our what should we say, the $60,000 low level holds, provided this low level holds, we are expecting breaks upwards of this level and continuations back into this high range at the POC over the next coming days. So again, provided we remain above that $60,000 level, we are still expecting continuations upwards, because all we have seen now is a retest of support of this range low. Think about it. Deviation, break upwards, support resistance flip before a continuation higher, provided support holds. If we fail to hold support, we could theoretically go as low as that local low at 56,000. This would be horrendously bearish if we see that, as breaking back below the 60,000 would not be the first, it'd be the second time we've broken below the range low of our high time frame trend, and that would increase the likelihood of a break to 52,000. So it's literally either bounce over here aggressively or see a higher time frame correction. Thank you for tuning in, guys. Hope you have a fantastic day. Keep those levels in your mind, watch them over the next couple of weeks, contextualize what is happening, zoom out if you're in doubt, look at the high time frame trends, look at what has happened historically, focus on the developing price action on the short term, and then act accordingly. Thanks for watching. Catch you guys in tomorrow's video. Have a fantastic rest of the day. See you then.